quarter. To talk about the company's Q1 numbers, we have with us the MD and CFO, Venkatraman Narayanan, along with that the Executive Vice Chairman and the CEO of Product and Digital Engineering Services, Joseph Anantharaju, joining in. Gentlemen, thank you very much for joining in. This is Rima here. Venkat, first question, revenue growth of 11.4%. Can you tell us what the organic revenue growth was? Because the top line has been boosted by the two acquisitions that you've done.
We've covered our performance very well in those 3-4 sentences. But we don't call out our revenue growth organic and inorganic because it becomes quite complex. We have now 3-4 entities which have come through acquisitions and they track on their own. Quite a bit of effort that we put on our organic side growth heads towards those other organizations. So suffice to say, we talk only about consolidated growth, and we have put up a very good show, 17.8% growth year over year in constant currency, and similar growth of 11.4% quarter over quarter.
What about your full year guidance of 35 to 40% on revenues and EBITDA margins of 22 to 24%? Do you maintain it?
There is a small correction, if I should say. 35 to 40 was on the basis that I would get the full year impact on account of these two acquisitions of Pure Software and CNBC. But now that we have only got 40 days and 38 days respectively, we would be, that's now stands corrected to 30 to 35% is what we'll do for the current year. This is what we are forecasting. I'm being a little careful with the use of the word guidance because, we are still coming to grips with the consolidated numbers as we speak. But 30 to 35 is a fair number for us to target for this year.
And what happens with margins?
Margins is 20 to 22%. Which is, there is no change. I did say that when we were having the conference after the acquisitions, and we have reported 23.9%.
Okay. All right. Let me get in Joseph in the conversation as well. What is the demand environment like right now? You've seen negative growth in travel and manufacturing this quarter. You're talking about a 30 to 35% revenue growth this time. What will this be led by?
If you look at it, most of the verticals have grown on a quarter-on-quarter basis organically, and some of them have grown at a pretty good pace, upper single digits. The vertical I'd like to call out is EdTech, which had been flattish on an absolute term the last 2 quarters, but it's shown a growth of 6.6%. The manufacturing, which is where you see quite a bit of a drop on a quarter-on-quarter basis, there are 2 reasons for that. The first reason actually is more of a restatement. 2 of the accounts that we had pretty decent sized accounts in the manufacturing vertical. They started with more of manufacturing, but their actual alignment, one of them is with high-tech consumer electronics and the other one is with industrial. So we did a restatement of both of those. The other reason being a couple of large engagements that we had in the with 2 large Indian-based auto manufacturers. They've come to an end, and there's a little bit of a gap before we finalize the requirements for the second phase. This is what has led to the drop. My sense is that next quarter, when we report Q2 earnings, this should have got regularized on a quarter-on-quarter basis. We should start seeing a growth. At a macro level, if you look at the demand environment, I think it continues. Customers continue to be cautious in how they spend, and the focus is more on short and medium term initiatives that contribute to revenue growth or are able to optimize on cost. And therefore, our ability to quickly to identify these priorities and align with them has been very critical. And here, the verticalization that we did announced and which went into effect on 1st April has helped us out immensely because delivery, sales, and domain have come together, and there's much more collaboration, knowledge sharing, and a joint sense of ownership of the customer, which has led us to align ourselves better, and that is reflected in some of the growth that Venkat talked about.
This BFSI growth of more than 60% on a quarter-on-quarter basis, is it purely on account of the acquisition, or even organically you are seeing growth come back in BFSI? And what is the outlook, Joseph?
So I think we did see some growth organically, but most of the growth has, as you rightly pointed out, has come through acquisition. Pure Software is focused. The largest vertical is banking and financial services, and Aureus is oriented more towards insurance. So between the two of them, they round out our BFSI story, and they've contributed to the huge jump that you see in the BFSI space. If you look at it across PureSoft, Aureus, and Happiest Minds, what we are seeing is that by and large, the spend is holding. A couple of customers have deferred their investments or their project, second phase of their project, into the next quarter. But I would say that it's much better than what it was last year, and we are seeing pockets of growth. And again, here, we have to again figure out what are the initiatives that are going to get funded, and quickly, align ourselves to those initiatives. And that's going to be the key, I feel, for getting growth in the next 6 months.
So this project deferral is only in BFSI, or is it across other sectors too?
See, what we've seen is that it's very dependent on customers. I wouldn't actually.
What for you?
Put a sector.
No, for you, which customers have deferred their projects? You spoke about BFSI, but any, yeah.
And then in the manufacturing space, there's a break that I talked about. But that should come back, I think, by end of this quarter, and you will see that getting reflected in the next quarter's numbers. And with media entertainment, one of our larger customers had put a hold on some of their requirements, but they've started, opening it up now. So we should see that coming into play in Q3 of our fiscal year.
Okay. Venkatraman, now that we are talking about an improvement in coming quarters, the deferrals also seeing a reversal. The average annual revenue per active customer is around $840,000. You've seen a growth of 5.5% on a sequential basis. When does it hit that $1 million mark? And is there any contribution that you saw from the generative AI business unit this time?
I think you're hitting all the right buttons. $840,000 per customer is absolutely a number that we want to talk about. Our $1 million customers has gone up from 48 to 58. Our average revenue, our customer revenue concentration has slightly trended down. And like Joseph talked about, we are now nicely splitting our, business amongst the domains of BFSI, healthcare, and edutech. So these are the strengths that we are seeing in the business coming out of both organic growth and also the acquisitions. Touching $1 million is that target, because somebody did ask me earlier, how many customers do you envisage when you touch the $1 billion mark? My take would be that would be somewhere around 600 numbers, active number of customers, and with about 1.5 million per customer. So if you have that kind of a number and a metric to track on, that's the target that we have taken upon ourselves to reach by 2031. But right now those are back of the envelope calculations. Coming to generative AI, we have been one of the only very few companies who have actually started reporting it as a separate BU. This is what we have done. We have generated $855,000 of revenue this quarter, 20 POCs, customer connects contracts as we speak, with 55 conversations happening. 1.5% is the revenue that we are tracking on that BU. Now, when we look at the financials, there are things that get hidden. For example, the investment that we are making into this new BU, that's about $1.5 million. So my EBITDA of 23.9% or 24% that we are reporting is after the investment we have made into new BU, the investment we are making into the consolidation play of the earlier BU of PES and DBS, growing into new customers, and also we have hired a new sales head. Those investments will start hopefully paying dividends from the next quarter. So the numbers speak only so much, but fundamentally we are on a strong wicket right now with a little bit of a turnaround in the market that we are all expecting to happen in Q2, Q3. I think we should be on the upswing.
Okay, all right, gentlemen, thank you so much for joining us today and giving us those insights. So that's the word coming in from Happiest Minds, looking at a revenue growth of 30 to 35% and margins as they had guided for earlier.